Bite-Size Dental Marketing. As always, I have Ian and Kevin. I'm so excited to have you on. We've known Maggie for some time up in Seattle, and y'all merged firms to create the dental accounting group. You're a partner there with her and Brian. I still think fondly of when Andre and I met you in Vegas on the way to the Sphere experience.
Yeah, at the ADCPA.
And
That
yeah,
was a good convention.
and there's this accountant like going toe to toe with Andre, on AdWords and market positioning, and it led to today. So, man, Kevin, thanks so much for taking time to have us and joining the podcast.
Happy to be here and talk shop. I love all things practice management and marketing and helping mutual clients out.
Now, tell me how you came to be. I know Maggie had a firm, you had a firm. There's some things going on in the accountant and space. Tell me a little bit about what led us here.
Yeah, and there's a long version and a short version, and we'll kind of keep it concise today. But long story short, there's three firms who work with dentist owners in Washington State, and in 2022, we all merged together to create the Dental Accounting Group. So we're Washington's largest dental-focused CPA bookkeeping business advisory firm. We work with about 400 practice owners in the state now. And now we're growing regional and across the state. Like we have clients in Arizona, Montana, and so forth. So we're localized Pacific Northwest, but we definitely have our eyes, on national.
Now, what are you seeing out in the space right now? I know when we were up in Seattle a couple of weeks ago, we talked about some of the very reliable TikTok internet things out there, which seems like a good place to get my tax strategy and life hacks. I trust the social media of the internet.
It's funny you bring that up because for April Fool's last year, I wrote a joke article as a parody to all the advice I see on social media for tax planning. The big one is kids on payroll and Augusta rule. And, I see so much bad advice and borderline tax fraud advice about what business owners can and can't do. And so I wrote this joke article for April 1st about the IRS passed some new tax legislation allowing you to, write your dog off as a business expense as a employee of the office. Now, some offices actually have dogs as a business expense as a service animal, but that's kind of rare. It's only I see some specialists doing that, and it makes sense in some situations. But for this joke article, it was like getting an EIN for your pet and like paying them on the payroll, and it was just going down a tangent because really the social media advice has gotten out of hand, and people don't do the due diligence they need before taking action on some of this advice.
Now, when we look at it in one of the pre-show and the other things we talked about, the Augusta rule, and you just mentioned paying your kids, like those are viable tax strategies. Just the social media is presenting them as like they're just a 5-minute thing, when in reality they're missing the important details around.
Yeah.
Where does it range from just outright lies to this is true, asterisk, assuming you put in 30 hours of effort to make it true?
Yeah. So, I guess the disclaimer is we're not your accountants. This is not legal or tax advice.
Sure.
This is, let's say I'm a business owner, and there's kind of a spectrum of what's right and wrong. And I have kids. I grew up in a family business. I understand. I want to get my kids involved in the business, and I think all business owners, small business owners, I think there's a right way to do that, and legal way. And again, there's a spectrum. So you got to have an employment contract, tracked payroll hours, a clear definition of what they're doing in the business, and it has to be reasonable wages for like kind services. So you can't just like put a kid on the payroll, let's say for shredding paper. They show up at the office for 2 days and you pay them $10,000 for those 2 days. That's not reasonable and necessary and like kind in terms of compensation. Now I see it's common for, let's say your kids are modeling for the website and they'll take some pictures. That's fine. But what's reasonable, is it $10,000 for a couple pictures on the website? Maybe not. Is it, I don't know, a few thousand? And maybe there's it's ongoing and it's more than just one photo shoot. I don't know. You got to look at it through the lens of the IRS. Like if you were to get audited, how is the IRS going to perceive what you're claiming? It is, let's just say, Kevin Jr., baby Kevin Jr., who's maybe let's just say 2 years old, is in the office 20 hours a week and they're cleaning, janitorial. Yeah, that's baloney. So you got to think about, like, put yourself on the defensive and think about how the IRS is going to look at it. And it has to be reasonable and necessary.
And Kevin, one thing you said there, the audit word. I know that's something that makes many of us squirm. But I'll play devil's advocate here. Hey, Kevin, I'm not going to get audited. I'm just a little old dental practice out here. I mean, we generate about $150,000 a month, $100,000 a month. Compared to the big guys, why would they come and audit me?
Great question. It's because the truth is, small business America, I mean, the IRS comes after the smaller guys. It's the majority of the taxpayers of the country. I mean, historically speaking.
Don't think you'll be the exception. I guess that's where I want to get at is it won't happen to me until it does. Until it does. And for the past 10 years, it has been audit roulette. I mean, the IRS has been underfunded and they didn't have the means to pursue everybody. But now the IRS is funded again and they're ramping up audits. Of course, they're going to chase low-hanging fruit first, like ERC, falsely claimed ERC is the biggest one they're chasing right now because that program had so much fraud in it. I'd say next, just look at, if you Google IRS Dirty Dozen, they come out with a list every year of clearly borderline tax fraud, in most cases tax fraud strategies that they're pursuing. So if you file your return and you're pursuing some of these, they'll come after you. One that's been around for 10 plus years is like the conservation easements. That's nothing new. We've been talking about it for years. That's something the IRS is coming after. I'd say R&D tax credits is one. I think they're going to scrutinize. I saw some tax credit consultants pushing that. They were telling dentists, like every single dentist could qualify. Like if you got a milling machine or a 3D printer and you were learning to do that just in routine delivery of services in the practice, some of the consultants were claiming that fell into the rules of R&D, which is ridiculous. And these consultants work off of commission, like percentage of how much the claim is. So if the claim is on the, amending the returns and owner gets, I mean, these are situations where you amend the return, it kicks out a refund, and there's not necessarily a procedure in place or funding for the IRS to highly scrutinize all these initially, but they will come back and look at them and audit them. The whole point of R&D was to promote an onshore manufacturing scientific development in the US, not for a dentist to learn to use a 3D printing machine. I only came across that a couple years ago. I think the marketing and sales from the consultants has kind of died down on that, but I would caution any dentist who's maybe getting pitched to do R&D tax credit because they're claiming to get, hundreds of thousands of dollars in a tax credit, and then this consultant walks away with a 30% commission. I would say pump the brakes on that before pursuing that strategy.
Now, when we were in Seattle, you talked about some changes of a 2018 era change that was coming due. It said sunset in 2025. Can you refresh my memory on what that was?
Yeah, so by the time this episode comes out, I mean, this is, things might change. This is the thing that everyone is not investing lots of time in, but thinking about, because we're in an industry where we have to relearn our job every 4-8 years or so, because every time we become experts, Congress passes some new tax legislation and we're relearning like the tax rules. And that happened in 2018. So with the Trump era tax cuts, with the qualified business income deduction, amongst other changes, that was a big thing with lots of savings for our dental clients. Now that's QBID, qualified business income deduction. That's phasing out. It's going to sunset after 2025 unless it gets extended. So this election could go either way, but I don't see how or why they would extend it, because the government needs more funding, and these tax cuts, if they extend, is just going to make the deficit worse. So it's a balancing act. I would love it to get extended because it benefits ourselves and our clients. I think it's a great tax cut that benefits small business America. So I don't care much for the corporate rates. Who cares? Our clients aren't C corps. They're disregarded entities, meaning it's a pass through. You get taxed at your personal tax rates. So yeah, if that truly sunsets, it's going to change some entity selection and tax planning. Because right now, at least in Washington State, best practice is you form as a PLLC, because it's just the nature of our market. The LLC in Washington, and this is legal territory, so this is not legal advice. To consult with your attorneys. But I'm just saying, best practice is you form as a PLLC, and you kind of wait and see and do a tax projection and planning session with your CPA to determine if it makes sense in that first year to elect to be taxed as an S corp or as a sole proprietor. There's lots of moving pieces, and everyone's situation is different, but that's our current process. But if, let's say, these tax rules sunset in 2025, QBIT goes away, we might move back to a situation where 9 times out of 10, a dentist will probably go to an S corp right away versus staying as a sole proprietor. I guess long story short, there's some nuances to maxing out the qualified business income deduction by staying as a sole proprietor. It has to do with taxable household income. So do your due diligence. This is not legal or tax advice. Talk to your, dental CPA and attorneys. But that's just as an FYI.
What percentage of dentists do you think don't have a dental specific advisor?
That's actually a really good question. I try my best.
50? I'm going to guess 50.
More.
More?
Yeah. So based on the math and our market research in Washington, we have about a 10% market share of dental practice owners in our state. And even just talking to more and more prospective clients, very rarely are they coming from a dental specific CPA or accounting firm. It's just the local generalist. And until they work with us for a year or two, they didn't realize what they were missing. And it's just the nature of one of those things. People, they go to dental school to become a dentist. There's not much business education in school. Maybe they come across a CPA through a family friend, but I'd say not every practice owner works with a dental CPA, and they should. Even if it's not us, they should work with a dental specialized service provider in their market. I mean, that same goes with marketing.
Yeah, it's true. I've said this, I've had Dr. Kyle Stanley and other people on, that have echoed this. 10 years ago, if you were a good dentist and an average leader, you killed it. Today, if you're a good dentist and a average leader, you're probably a great employee for someone else. It's flipped. You need to be a great leader, and you can probably get away with being an average clinician. And that's sad. But one of the areas that we see across our portfolio is the offices that have a good leadership team around them, including, the accountants and helping them decide how to structure their business and when to buy equipment and things like this. We see them do significantly better. And part of that is, how much should I be spending on supplies, and what can I pay my hygienist, and all of the benchmarks that you and Maggie and Brian developed through the years. It does shock me that they would not want to have someone who sees 400 or 500 of these to bear. It's like going to someone and be like, no, it's my first crown, but don't worry, I'm a really good dentist. Or going to someone and be like, it's my 400th crown this week. I mean, there's no contest to who's most likely going to be more effective, right?
Well, and that's one thing we come across too is, oh yeah, my accountant or CPA, they say they work with dentists, but when they say they work with dentists, typically it's like 4 or 10 max versus like a dental
specialist.
Yeah, it's not. Yeah, exactly. And so they say they work with dentists, but in terms of talking shop and knowing the revenue cycle and diving into benchmarking data and understanding the ins and outs, it's lacking on that. Typically, it's just an annual compliance engagement. They're, and maybe they do a great job, maybe not, I don't know. And every CPA and accountant's different. Some of them just take clients' financial data at face value, do a trial balance, drop numbers in the tax return, and run with it. We have a very comprehensive approach. We handle monthly bookkeeping because we think we need to start with bookkeeping as the foundation because it ties into tax planning and year-end compliance. So by handling the monthly accounting, we're able to send that financial pulse report and then have that benchmarking data to share across our clients. So it's, of course, extremely private. We're leveraging technology to deliver better value. What used to be all by hand, we used to compile all the data, spend about a month of time creating our annual survey. Now we're able to aggregate all the client information in with this software, and allows us to benchmark with different key performance indicators in real time. It's amazing, and it's something I want to share with more and more docs. We just rolled it out across our company groups just this summer, so this is new for us, and it's a great value add of many things to work with a dental accounting firm like us.
And I want to ask Kevin. Of course, I'm hearing the benchmarking that you can do is phenomenal. The bookkeeping, the team that you have. I know you also said you're proudly only hiring in the US. Your whole team is US based. All of that. All of those things are amazing. But what problems are you actually solving for me as a dentist? Like, why should I care what you're telling me about all of these great things that you're going to do for me? What does it mean for me as a dentist?
That's a great question, Ian. Thinking about what a practice owner in 2024 looks like, you have lots of different stress points. You're wearing lots of different hats. The last thing you want to have to do is on a weekend or weeknight is looking at your accounting, posting transactions, trying to make sure everything balances, and then running a key KPI report and seeing where you stand. We take that stress off practice owners' plates. We're in charge of all things accounting. So it's peace of mind knowing that that data that you can take action on is getting compiled and reconciled and completed on a monthly basis. So you can have reporting ready for you. It's going to be factual, and you can make decisions, in real time. That's one thing. And what we can do for you, it's more than the numbers. We say, we're offer business advisory. Like, what does that mean? We're really a sounding board for our clients. So oftentimes clients reach out, phone, email, text, asking us lots of questions. Do I need to hire a hygienist? Does it make sense to bring on an associate? What are HR best practices, or what are other practice owners doing for marketing? So that knowledge bench that we have just from working with a specialty allows us to share best practices across client groups. And that's probably one of the biggest value adds that most of our clients take advantage of. I think there are people who, they only want a tax return done and don't want to reach out and don't want to leverage, an expert like us. And that's okay. We're not for everybody, but we're definitely for the owner who wants to improve, their financial success, wants to understand the practice management side, see where they stack up, understand how they can improve where they're at. One of my favorite quotes I've been hearing this last year, and I just told a practice owner today, is increase your participation or decrease your expectations. I think some people walk into practice ownership and don't really step up and take on those extra duties of what it means to be a good business owner. It's spending that extra hour or two a day, thinking about the marketing piece, looking at, practice management, trying to figure out how to tweak processes and improve the patient experience, all the little touch points that build up. And it's more than just showing up to work. You can't have high expectations, but then low participation. You need to expect to put in the work, and our job is to supplement their time and point them in the right direction, hopefully help them save time in terms of making good decisions for running their practice.
So Kevin, that's a great explanation there of some of the problems you'll solve. What if I still say, okay, I hear you, but I'm not interested? What are some of the mistakes these days that dentists are making that to a dental CPA, it would just be it's a no-brainer. Here's how you could be doing so much better in your practice, but it's things dentists, they just don't.
Yeah, I think there's a lot of things, and there's a long answer and a short answer. And it ranges from accounting to tax planning to even practice management compliance, especially HR compliance. One thing I always bring up is make sure you're reviewing your employee manual and making sure it's up to date and compliant, because rules change every year. And that's why you should work with a good employment practice attorney or HR company to making sure your employee manual is up to date. That's a big thing. Now we're involved providing support on the payroll side of things for our clients. So we make sure, tax rates and things are entered correctly. Another big thing in our industry is misclassification. Now we're going to go on payroll a little bit. Misclassification of associate dentists. We see it all the time. If you go through the Department of Labor safe harbor rules, I'd say most situations, especially general practice, they should be W-2 employees versus 1099 contractors. If you ever get audited, there's interest and penalties involved with that. You want to avoid that. I would say in terms of the metrics, there's certain things like from a surface level, looking at a profit and loss and some of the benchmarks. The biggest thing that stands out sometimes for like an average practice, it's the staff model. Sometimes they'll overhire on admin, like a 2-2, typical, 4 practice model. It's like a one strong office manager and receptionist, 2-2-2 model, 2 dental assistants, 2 hygienists, 2 admin, 1 doctor. That should be able to support you up to, in terms of like adjusted production, so net collections, like up to 1-2-ish, 1-3. But sometimes we'll see a practice owner have 3 admin or 4 because the staff is inefficient with their workflow process. And so they tell the owner, yeah, I'm busy, we need help at the front desk, or, it comes down to inefficient process and maybe the wrong person in that seat. And so we see owners overhiring in that department. That's an easy thing to adjust. What practice owners are doing or not doing, it's, I would say, staying ahead of their tax liability. And that's one reason why people come to us is, I got a tax bill, in April, I have to write a check for $30,000 to the IRS. My accountant didn't tell me. Well, that comes down to planning with intention. So we try to get ahead of that. We do a tax projection planning mid-year for all of our clients. And then along with that is the annual client survey and benchmarking data. You can't cut your way to profitability 100%. You got to focus on top line too. But, if you're spending above average on dental supplies, lab expense, there's some tweaks you can do there to help, build some margin. But one thing that stands out a lot when I recently updated our tech stack to allow for this additional quick benchmarking is practice owners aren't spending enough money on marketing. They want, in some situations they say, oh, my target is 30 new patients a month, which is a good growth target. If your intention is you want to grow, you want to add, let's say, $200,000 in revenue, on a go forward basis per year. Well, we can back into that. And, the rough math is, okay, you need to add about 30 new patients a month. Well, how do we get there? Well, what are you doing for marketing and advertising? And you're looking at the data, and most of our practice owners aren't even spending 1% of revenue on any advertising, marketing, and promotion. You can't have a goal of growth and having new patient inflow if you're not spending money on intentional marketing. I think we need to go back to some of the basics in practice management, business management. Is you can't just show up to the practice every day and just go through the motions and expect to improve. You have to think big picture and think small at the same time. What's your practice philosophy? And then take steps in how do you increase, how does your practice philosophy tie in with your culture? What are your core values? What's your patient experience? From the second that patient looks you up online, what's your digital footprint? How does that compare to your physical footprint? What are your touch points with the patient? And then from A to Z, mapping out that whole experience. And I don't think enough practice owners do that. And then figuring out where you can improve and go from there and create, patients who want to rave about the experience. I mean, that's what we've been doing this past year. We really focused on our client experience. What are ways we can improve internally in terms of our deliverable, how we can improve our touch points and how we service our clients. And in turn, we've had an increase in word of mouth referrals. The dentist needs to do the same. They need to think about more than just the clinical, what is their practice philosophy, and then just really make that wow experience and then market it,
Yeah. Kevin, I think you made a great case for why you want a dental specific CPA when you can talk about nutrition, when you can talk about patient experience, and that's your accounting team. I think that's powerful. Because to me, the best advice, not everyone's advice is equal. Someone who understands my business and has seen others like me, that's someone advice that I want to adhere. And I think that what you and Maggie and Brian are doing at the Dental Accounting Group are just really top notch, because you're right, you're not working with 5 or 6 dentists, you're working with 400. And your team can bring an entire, suite of leadership around them that helps them become better business owners. And man, you're doing some good work out there in the world, man. So thank you very much, Kevin.
Yeah, happy to. I mean, I'm passionate about helping small business owners. So it's like I've said before, it's more than just the numbers. We want to help more and more dentists understand the business of dentistry and improve their financial success. Okay, I'm going to go on a rant here, but this is why I love the United States. It's one of the few countries where someone can, have a small business, accumulate wealth for their family, and have an amazing life. And there's a roadmap to do that. I mean, you can, go to dental school, open a practice, and you can make a good living. Now, there's some headwinds in the industry now, and understandable. The specialists are doing very well for themselves still. The general practice owners, it's challenging in 2024, but there's still a pathway for, wealth accumulation for you and your family. And I mean, this is what we're passionate about, is helping our owners, improve their financial success, because yes, patient care is important. We want to help people help other people. But at the end of the day, we're in a capitalist society. There's alignment. There's a reason why the best doctors, are in the United States. It's because the best want to align themselves to, yes, give good clinical care and help as many people, but we're still here to make money. And I feel like we can't just lie to ourselves in saying, oh, we're just doing it for the good of our heart. There's an alignment between giving care and still doing well for yourself. Otherwise, we'd all just join community service health centers. You know what I mean? We're in private practice for a reason. It's because there's a pathway for wealth, and we can take care of patients at the same rate. And we can do better service and better care than DSOs. Private practice, I think, is still the answer for dentistry.
Well, thank you so much for your time, and we'll link out to Dental Accounting Group in the show notes, and we'll maybe you and I can get together and write a little summary of the Dirty Dozen and how it applies to dentistry and put it on the site. But that's really exciting, man. Thank you so much for joining us.
Yeah, thanks for having me.
Thank you, Kevin. Thank you, everyone.